Hey, good morning, everybody. It's Brian. Hope you're doing well today. It is 6th of November, Friday, and got a lot happening today. Hey, it's Friday, which is great. Got the weekend to look forward to. Weekends are great. Love them because they're a great opportunity to sit down and kind of go through your plan, see what's working, what's not working, and make tweaks and changes. It's a great thing. And if you don't have a plan, it's a great opportunity to make a plan, because that's all you're gonna, the only way you're ever gonna find consistency in the market is to have a plan. So anyway, what is going on for today? Well, it's non-farm payroll Friday. So first Friday of every month we have non-farm payroll, and that's a pretty volatile time, or has the potential to be a pretty volatile time. It's definitely one of the most watched news announcements that are out there. That's actually combined today with the Canadian employment change as well. So both the U.S. and the CAD have high impact reports coming out. All eyes are really going to be over here on non-farm employment change and the unemployment rate, and that could be a pretty big market driver. What does that mean to us for a potential breakout this morning? Well, what it means is you don't really want to trade that until after the news hits. Very, very, very adamant about that. What happens, and I know I've alluded to this a few times and I've said it before, but I'm going to just go through it again for folks that may not have seen it, is the Forex market's an auction market. And what's happening here is you've got orders coming in, right? There's orders where market makers and other participants are willing to trade, right? Where they're willing to do business. That's the bid and the ask. They're willing to do business here, and that's where their bids and their asks are. That can change without any actual buying or selling taking place. So what happens is, as we get closer and closer and closer to a news announcement, especially a major news announcement, where market participants are willing to buy and sell changes, they might take off those price points that are right near where the market is currently actually trading and doing business, and you'll see spreads start widening. The bid and the ask will get wider and wider and wider. And it's not like it just happens for minutes and minutes. This is something that takes place right ahead of the announcement and for the first couple of minutes right after, and the spreads go back to normal after the announcement happens, and they can kind of go back into the market under regular market conditions, right? So the spreads widening is dangerous, because if you're especially if you're trading on lower time frames, if you're trading on something higher, 4 hours, dailies, maybe even hourlies, depending on how tight your stop is, you're probably okay. But if you're trading on a 5-minute chart or ending on a 5-minute or a 1-minute chart, and you've got pretty tight stops, you can get blown out just by that spread widening. So all of a sudden, you've got a stop loss that's maybe 5 pips from where you are, and the spread widens by 15 pips, which, I've seen spreads go 18, 20, 25, 30 pips. So imagine if you've got a 5-pip stop loss, and all of a sudden that spread just goes bloop the 30 pips, and you get slipped by 25 extra pips. That can be detrimental on an account, depending on what you're using, what leverage you're using, and how many contracts you're trading and whatnot. So be careful around the news. The market's going to be there after news, and I know people get excited about the volatility. Oh my God, there's so much happening right now. Oh my gosh, it got to take place. The reality is, it's a dangerous time to do it. Let the news happen. Let the market go crazy. Spreads widen, have some chop and some whip around. Then take 5 minutes, let the market normalize, then go, emotions out of the market, what's actually happening, and then look over here, see which currencies are moving, see which ones are actually being traded, which ones are being bought, which ones are being sold. At that point, go in, trade your breakout from there, and say, okay, here's our post-news thing. Let's do the market analysis. Which currencies are being heavily bought? Which ones are being heavily sold? Where do I have my divergence? And how does that look based on the current movement of the market? Based on where that specific currency pairing, if once you look at the heavily bought, heavily sold, and you determine that these are the pair, this is the pair or the pairs I want to trade, how are those looking on a chart? How have they moved so far for the day? Have they moved to or exceeded their ranges already? what's the real opportunity there? What's the volume details showing us? Are we favoring buying, favoring selling? Is that in the same direction that the divergence is showing us? If all that lines up, then by all means take a trade. And if it doesn't, it's okay. You didn't have a trading opportunity for that day, and you go on, shut down your monitor, you go enjoy the weekend. All right. So that's it. I don't have a breakout for you right now because we won't know what that looks like, if it looks like anything, until after we get through the announcements at 7:30. All right. So, but hopefully you got a little bit of a takeaway from market mechanics, and if anything, let that sink in. Watch the market around news. If you don't have your ask line on your charts, go in and put it on. Show bid and ask. You want to see both. That way you can actually see the spread. So it'll put the little red line on there. So you'll see where the market is doing business, and you'll see that spread between where market makers are willing to buy and sell. And that gives you some idea of volatility as well. As that spread widens, it means that there's a lot of uncertainty in the market where market makers maybe aren't willing to do business, at a low cost right there at where price is actually moving. So anyway, all right, that's it. I'm going to leave it here, and I'll come back in about an hour for the futures update.